Good morning, Joyce.
Good morning.
This is John Ondrick, and I'm talking to Joyce Bllman from National City Mortgage Services. And Joyce averages about $4 million a month, and is a very high producer, and also has some unusual quality in that she has some longevity in this career too. I believe you have about 22 years in the business.
That is correct.
The first question I always ask out of the gate is, how'd you get where you are, and when did you start?
Well, I started out in the savings and loan industry, and at that time, loans and savings were tied together. So as a assistant manager or a loan officer of a branch, you were involved in both ends of the transaction. In the very late 70s, early 80s, the institution that I worked for broke the two apart, and the savings area had their own individuals, and the loan area went on their own. And at that point, I became a mortgage loan officer.
When you did this was, I guess about 22 years ago, did you go through the S&L crisis, or did this take place sometime a little bit later?
There really wasn't any in our institution. We really didn't have any crisis situation. We didn't have interest rates that were not covered and loans that were not covered. So our institution was safe.
So you just went along your merry way, huh?
Exactly.
Well, when you start, what is your market area, by the way?
You mean in Dayton, Ohio?
Yeah, in Dayton, Ohio.
Yes.
And have you operated out of the Dayton area for most of your career?
All of my career.
All your career. Born and raised and went to school there too, the whole shebang?
No, I actually raised in St. Louis, but graduated from a local high school here in Dayton. And so all of my couple of years of education out of Dayton, but most of my life since 1969 has been spent in Dayton, Ohio.
Let me ask you about your early career just a little bit. It was far enough back we won't dwell too much on it, but when you started off in the mortgage side of the business, did you do it the traditional route where you were dealing with realtors, or did you do it with new homes, or how did you start your business?
Very traditional with real estate agents, and just developing relationships, and also developing relationships with customers that ultimately led me to many transactions time and again with those same individuals.
And then I guess I'm going to assume that some of the same realtors maybe you have today?
A lot of them are the same realtors I have today. Some have retired at this point, some have moved, and of course I've grown from that base, but I do still have some original realtors that started working with pretty much from the very beginning. You
said that you've grown from this original base. If we can kind of update the conversation and take it into today, in today's arena, exactly how's your business split up? Is it still primarily realtors, or are you now dealing primarily in referrals?
I'm about 50-50. I would say about 50% of the business I get comes from realtors, and about 50% comes from referrals from past clients, friends, and acquaintances.
Do you have a database? How do you keep track of all your people?
We do. I do have a database. I have an assistant who helps me keep track of that. Before I had someone to help me keep track of it, though, I pretty much kept my own database and kept the information on my past clients. But that's only been going on since probably the last couple of years.
Do you think it's essential to have one in today's environment?
Yes, I do. I definitely do.
How do you use your database?
For mailings, and also having the information available when a client comes back to me either to refinance or purchase their next home.
I'd like to switch and talk a little bit about the realtors that you're dealing with today, and I guess what I would like to know is your personal habits in your dealing with realtors. Do you still get out and do you call on the offices, or pretty much is that over too?
No, I do not call on offices. If I'm out taking a loan application, of course I do visit with the real estate agents, and there are a lot of realtors that I do socialize with just because of friendships that have developed over the years.
There's kind of two schools of thought. The interviews that I do, I'd say about half actually develop rather deep social relationships with their realtors over a period of time, and then there's others that prefer to keep it more on a professional basis and on purpose. And so do you keep social relationships primarily, or?
I'd say it's about 50-50, and it's just a matter of rapport. But I would say all in all, I have a fairly strong relationship with almost all the agents that I do a fair amount of business with.
What about because there's a lot of listeners out there today that are young loan officers, they're new, they're just getting started, and I wondered if we could kind of turn the direction of this a little bit and perhaps talk about some of the things that you do in your professional career that you would recommend to the new people out there who either are having a tough time or they're just getting started, but are in the early stages of their careers.
Well, I think the most important thing is doing exactly, following through and doing exactly what you say you're going to do. Most of what I hear from agents in terms of their frustration with either new loan officers or not so successful loan officers would be that they're not kept informed. These individuals don't follow through. They promise more than they can possibly accomplish. And I think it's a credibility issue. A real estate agent has their work to do, and they don't want to do the loan officer's work as well or have to worry about whether the loan officer's doing their job. So I think that is absolutely the most important key to being successful, is developing a reputation as being someone who is honest and works hard and stays on top of things and gets things done.
Yeah, that's easier said than done, though. I think there's a lot of people out there that hear that, but I'm not sure they understand that in the sense of what really the depth of the commitment that's needed. And do you find that you're running into a lot of new loan officers out there yourself that, all of a sudden they're just missing? They come in for a couple of weeks or a couple of months. I know that scares realtors to death. That people are going to, show up for a couple months and then all of a sudden they just disappear.
I think that's definitely a problem, and a lot of realtors are concerned about that. We do see a lot of loan officers that don't make it. Unfortunately, there are a lot of people that think this job looks easy. They think it looks like fast, good money, and they don't realize the commitment you have to make. You have to be an individual who doesn't mind getting phone calls late at night, early in the morning, on weekends. You have to be an individual who's willing to keep long hours into the evening to meet with applicants. If a loan officer's not available, most of the time they won't get any business.
Mm-hmm. There's a couple of recurring threads that go through the interviews I do, but I think one overall one, which is relationships, of course, but also I think an underlying theme is being available. I think the people that I talk to, the successful people I talk to, they all seem to be available, whether it's day or night, or they have everything planned so that they can respond. And I just wondered if you might go over that a little bit more in depth and just what that kind of commitment entails.
Well, I think voicemail is very important. I happen to not use a pager other than so my family can reach me. I know a lot of loan officers have voicemail that goes ahead and activates their pager so that they know they have a voicemail. I just check my voicemail all the time. Plus, I always have the option to go to an assistant. And then in terms of during the weekends, I check my voicemail usually every couple of hours. So I know there are people that probably keep themselves even a little bit more available with pagers, but I feel that's carrying it a little bit too far. As long as I'm checking my voicemail and getting back to real estate agents very quickly on the weekends, I think that's enough. But it's all a matter of being able to, respond to the phone calls that come in a timely manner and make sure. I know there's certain days of the week that the phone calls are so strong and so fast and so many at a time that it's hard to get back to people in a timely manner. So sometimes you have to choose what's the most important at that particular time and have someone help you return those phone calls.
Mm-hmm. Mike Twigg, who's a regional manager in the Worcester metropolitan area, he has a theory that it's not radical, it's not unique, and it's not even unusual. But his theory is that loan officers need to go after what he calls the centers of influence, those realtors who will not drag a loan officer along, give him a deal once every 3 or 4 months, but go after those people that not only can you develop relationships, but who will give you considerable business.
I think that's very important. I agree with that.
You do. Did you do that yourself when you started, or do you do that now?
I did that when I started, and I still do that. Most of the agents that I do business with, I get a very large percentage of their business. I do have some agents that I've developed relationships with over the years that have a tendency to spread themselves between 2 or 3 loan officers, but I found that on the important transactions, the ones that they think are a little bit more difficult or the personality of the individual needs a little bit more hand-holding, that I always get those deals.
And why do you think that is? I mean, there has to be specific reasons why they gravitate to you, besides longevity, which does count, of course.
Well, and I think it's partially my reputation for getting the job done, and I think it's partially because I really do empathize with my clients and get very close to the people I do business with. And there are some loan officers out there, although they're good technicians, they don't, and they follow up and they do a good job. They don't develop the relationships with their clients. And there are a lot of people that are nervous. Yeah, usually first-time home buyers are nervous, but even second- and third-time home buyers can be very nervous about the transaction. And if they're dealing with a loan officer that really is not too connected to them, it can be a situation that is not quite as comfortable as they want it to be.
Mm-hmm. Yeah, I agree with you there. I think the relationships really fundamentally go to the core of our business in our industry. And that if you cannot develop these relationships, if you cannot be empathetic, if you cannot, return their calls and hold their hands, ultimately you're doomed to failure. And you're the first person that's actually used the word technician in all the interviews that I've done, and I find that that's actually a marvelous word, and I think it really sums up some of the problems that loan officers have today, where they, as you say, they almost become too clinical about it, and don't focus on the individuals involved in the transaction, whether they're customers or whether they're realtors.
Exactly.
The relationships that you have developed with your clients and with your realtors over the years, is it based on the fact that you think you have an outgoing personality, or are you kind of A+ extrovert, or where do you kind of fit on the scale?
Well, I do have an outgoing personality, but I do really enjoy people, and I'm interested in seeing that people are able to achieve what they want in terms of their home purchases. Probably sometimes I get a little bit too involved in the individuals, but that's always been the way that I've been since the time I started doing the loan applications. I really do like people, and we all have those clients that are much more difficult to deal with and a lot more difficult to like, and maybe in many instances you don't like them. But most of the people that I do business with, I really do develop a relationship and consider them almost a friend, and in some cases I do consider them a friend in the end.
I wonder if you take us through a typical process when you get a call from a realtor, and by that I mean where I'm heading is, do you ultimately end up doing a lot of FaceTime with the realtor? Do you do a FaceTime with the client? Do you take the apps yourself in hand? Those kind of issues. To develop the relationship, that's really the overall umbrella here.
Well, actually, at this point, because I do have those relationships developed with the realtors, in many cases, they're calling up and scheduling the appointment or having the customer call and schedule the appointment, and sometimes the realtor comes and sometimes the realtor doesn't come. Most of them feel comfortable enough about how I'm going to handle the transaction that they don't feel the need to go to the appointment as well.
Oh, sure. Mm-hmm.
Not that many appointments are actually scheduled in the real estate offices anymore, and I think that's partially because of the fact that a lot of the real estate companies have started their own mortgage companies, and so most of the realtors don't want anyone in their office to see that they're still not supporting their company real estate office.
Good observation. I like that.
Or
You're
mortgage
right.
office,
Sure.
I guess I should say. So they're sending people to our location, which makes it a lot easier for me. I don't have all the travel time I used to have and breaking down my computer and taking it with me. But I do take all my own loan applications. I do have an assistant that just because I'm training her to be a loan officer, I will probably start having her do a large portion of my loan application and then coming in and meeting with the people. I'm sure I could do a whole lot more volume if I'd have someone else take my loan applications for me, but I don't know how a loan officer develops a relationship with a client unless they sit across the table from them face to face. I don't think if you have your assistant take a loan application for you, and then all you do is call the customer to tell them they're approved, that you can develop any kind of relationship or rapport with that customer to expect that when they buy the next house, they want to come back to you. I'm sure there's some magic that I'm missing here because there are loan officers all over the country that have 2 and 3 assistants taking loan applications for them, and they're very, very successful. And again, I'm sure I could do more business, but I just can't grasp that that philosophy at all. Mm. So again, I'm probably missing out on something, but I still like to meet face to face with my own clients.
Yeah, I'm not sure you really are. I think you actually have it right. I mean, in terms of sales, if you look at the sales pyramid, nothing really beats being at the top and being able to shake somebody's hand and look in their eyes and ask them direct questions. And you're right. If you want to form a deep relationship, nothing will ever be as good, not that it doesn't work another way, as being there doing the apps. One of the loan officers I talked to not too long ago, he purposely leaves his computer outside the office and comes in and still, even if he has all the information, he still will sit down and go over and take a hand 1003 just so he can have time to banter back and forth with the clients.
Yeah.
He thinks that a computer, you're sometimes turned a little bit sideways and candid, and you're typing in, and at times it's difficult. So he takes it a little bit to an extreme, but I think the point is well taken. And I think also that it leads into other issues that help a loan officer too, and that is one that comes easily to mind is pricing. Pricing can always be an issue in our business, as you well know. And if you have a relationship, when things get a little tight or you're a quarter point higher and they want a lock or something, if you have that relationship, it certainly is going to make it a lot easier at that time.
I believe so.
Let me ask you though, since I brought the thing up, it's not too often I actually do talk about pricing in interviews, but I would like to talk about pricing with you and how you feel about it, and with respect to is lowest best, and how do you survive in an environment where you're never lowest, and the emphasis that pricing seems to have in today's environment now. I think people are a little more price sensitive. Wouldn't you agree?
Oh, I definitely would agree. The unfortunate thing is price should never be the issue. Most lenders are going to be in the ballpark, pretty close to the same rate, if everything is calculated out correctly. If an individual goes out there looking for the best price, and many times they can get swindled by a company out there that's not so reputable, that is trying to capture the market in a not from reputation, but just one transaction at a time, with no care as to whether they get another transaction from that individual or not. We've seen it time and time again in our market where our newspaper publishes interest rates, and Dayton Mortgage Bankers, which is our association for the mortgage people in Dayton, have long tried to push the newspaper in a direction to not publish individual interest rates and costs in the newspaper, but to list the names of all the lenders and phone numbers, but just put an average cost in the paper on a weekly basis. Well, they wouldn't do that because they like charging each individual a large sum to advertise their rates in the paper. The unfortunate thing is they don't police it. Even though it's supposed to represent correct information. In other words, is this a fixed rate? Are there any points? Are there any origination fees? What are your closing costs? Time and time again, lenders lie about what their interest rates are. And National City, the company that I work for, pulled out of the Dayton newspaper publishing their interest rates because we'd always look like the highest, because we were one of the few that would refuse to not embellish what our interest rates and costs were. So the consumer is really getting swindled by not knowing that not everybody's going to tell them the truth when they call in. If a disreputable mortgage company puts a low interest rate out there and gets a phone call, and the individual wants to lock in that day, they just have to say, well, rates have gone up. And then the consumer assumes, well, they were the lowest in the paper last week, even though the rates went up, they'll still be the lowest. So consumers are really putting themselves out there to be totally swindled by shopping for interest rates. They're so much better just finding out the one or two or three companies in town that have the great reputation, getting referrals from maybe coworkers. Hate to say real estate agents, because in some respects that gives them the opportunity to maybe push their mortgage company, and that might not be the best possible lender for them. But they really need to realize that the company with the best reputation out there is maybe not going to be the lowest, but they're going to be close to, they'll be in the market for sure. And their service will be complete.
Yeah. You're not the first person that I've interviewed that's brought this up. You're the first person that's brought it up in the tonality that you brought it in, which, interestingly enough, is how I feel about it, because my thing has always been that these things are called in usually on Thursdays to get out in Saturday morning's paper, and it's very easy for someone to say, when they call in, as you suggested, Morgan suggested, that, if you just call me on Thursday evening, then happy to give it to you, but now this is where we are. You see a version of that, too, and I actually don't want to steer you to it, but on the Internet, where some of the Internet players today, people that are going in and using the Internet as an informational source, there's some of them are getting trapped into loans where it looks on the face of it like they're saving money. But when they go in, and if they were to compare a list of your closing costs, for example, that you would give them with the ones that they're getting on the Internet, that there's all these junk fees built in, and the reality of it is that there is no significant price differential. So it just doesn't happen in the newspapers. Well,
and I think that the Internet brings up another question, another problem. As much as Fannie Mae and Freddie Mac have really brought everything to common ground, pretty much in any area that you would be lending, people using the Internet for their mortgages are ultimately always going to pay more money, because the provider of the mortgage doesn't know anything about local customs, doesn't know who's responsible for paying what. For example, in Dayton, Ohio, it's assumed the buyer pays everything in terms of closing costs and title insurance unless otherwise stated in the contract. Well, Columbus, Ohio, which is 90 miles away, the seller is responsible for providing lenders and owner's policy title insurance. Well, someone who doesn't do business in Columbus, Ohio, and is not going to know what the local customs are. They're not going to know title companies. They're not going to know the local appraisers. It just makes absolutely no sense at all for individuals to do business that way. Mm-hmm. They're much better off going with a local lender.
Right, exactly. What advice would you give to, if we can steer to our audience, what advice would you give to loan officers out there in fighting some of this when they get clients calling about internet prices and some of the things that you've talked about?
Well, I would first of all tell those individuals, if they get a phone call from an individual that says, well, I'm checking on the internet, that that loan officer gets something in writing in terms of a good faith estimate from the institution that they're talking to. Mm-hmm. Apples and apples makes a whole lot more sense than not knowing what they have to compare. So an individual should ask for a good faith estimate and be able to compare the total cost and fees, not just verbal points and origination fees. And if, in fact, a company says that, well, I guarantee this rate to you, the individual should be asking for it in writing. And there's a thing called a fax machine, which is, and email, which works very well to pass that information along. So I think any loan officer that is dealing with a client who says they're talking to someone on the internet should advise those individuals and also themselves send those individuals a good faith estimate so that there's a good comparison going on.
Mm-hmm. No, I couldn't agree more. And that brings up a point that when you're fighting some of the internet companies, that's where you really can win with them, because when you do a side-by-side analysis, it's almost inevitable that their fees, they're going to have built-in junk fees, and their fees are going to be a lot higher.
Yes.
But in today's environment, I think that it's just essential that loan officers out there be equipped to do this. I think a lot of people, loan officers out there, just kind of roll over to some of these internet companies, and it's really so unnecessary.
Well, and I don't think a loan officer, and I fall into that trap the same as everyone else, depending upon what kind of a day I'm having and how many phone calls have come in. But I don't think a loan officer should ever, when a customer calls, quote the interest rate just right out of the gate. I mean, they should get a little bit more information about the customer, what the customer's needs are, what type of loan program they're looking for, how long they think they're going to be in the house. Start developing that relationship before you start spitting out interest rates.
That's a good point, and it's well taken. And it's well taken because a lot of loan officers, and I think even when I was producing, was guilty of it. People would call up and say, well, what's your 30-year fix today? And you're right, the first temptation is to say, well, we're at 8.5 and 2 points, thanks, goodbye, you know.
Yeah, I've got another phone call to take. But.
And right, exactly. And what do you have? You have nothing. How about there's an area I want to talk about that is increasingly cropping up in interviews today. You alluded to it, and it's the kind of the nature of the beast out there that a lot of realtors are getting their own mortgage subsidiaries or doing business alliances. And I wondered if you maybe discuss that area. You have a lot of experience out there in dealing with that, and how you parry that threat out there.
Well, it definitely, I believe, is not a good trend. Of course, I would not think it is a good trend. First of all, I think the customer is the one that ultimately ends up being sacrificed, because in many cases they are influenced by their real estate agent just for pure lack of no one else to trust, and that's not saying they shouldn't trust their real estate agent, but it's a conflict of interest. No matter what anyone says, there is some payback that's going on, and actually HUD should be looking at it a lot harder than they are, unfortunately. But there ultimately is a payback, and it sometimes is in terms of just keeping in good standing with your broker. In other words, these agents are being pressured on a daily basis to send business to their in-house lenders with no regard to whether the customer is either getting the best service or the best rate. And in many cases, these in-house institutions don't have all the programs that a regular mortgage company would have. And I think the loan officers that work for them get very lethargic in terms of any kind of customer service because they've got a captive audience. They get to the point where, unless they're just a people person to begin with and really very diligent in their job, over time they take everybody for granted, the real estate agent, the customer, and I don't think the customer gets the best service. Not to mention the fact that they're being enticed to send this business to these loan officers because their company is going to put them in a pool for a trip, or they're going to buy the office computers, or, we've heard it all. And the long and the short of it is not giving the consumer all the information.
Well, you've stated the problem, and you've stated it really quite well. But what about for the audience out there, those people that have to fight that every day? What do you view as the solution to the problem? How do loan officers parry that? How do they get around that? And how do they fight this? Because you're right, it is an increasing phenomenon out there.
Well, I think they need to make sure that their agents, even in these close tied business relationships, be aware of the services that they have that these companies don't have. For example, if they have 203Ks, a lot of these in-house lending institutions don't care to have anything but vanilla products because they don't have to. They can get fat and happy just doing fixed and some easy adjustables day in and day out because they don't have to be ingenious. Many times it's just a matter of educating that agent and making sure that agent knows that, gosh, there's not going to be every transaction that your in-house lender is going to be able to provide you with. So remember me for these other transactions. And I think as time goes on, these agents start to realize, well, gosh, the people that are working for our in-house mortgage company really can't provide all the services that I need, and they'll have a tendency to get more of the non-traditional business, and then ultimately probably the traditional business because of that.
What about another phenomenon that's happening out there where loan officers are really being, for all practical purposes, being denied access to the offices by a secretary up front, by a manager, and it's very overt in some cases.
Well, then I think you need to maybe send mailings to them independently, call to make appointments with individuals. If you have agents you've done business with for years, there's no reason why if you call them up and say, gosh, I'd like to meet with you on Wednesday afternoon at 2 o'clock for a cup of coffee to tell you about a new program that has made some real estate agents extremely successful in this type of environment. I think they need to pull the agents away from the office. And I think that helps.
Mm-hmm. What about the concept, if you would discuss a little bit about what you do to ensure that you get what I call the first call? There's a theory in sales out there that since agents are required to give at least 3 names today, that really what you want to do is maneuver yourself into a sales relationship where you're getting the first call. And I wonder if you'd discuss that a little bit.
I don't. Maybe I'm wrong, but I don't feel that the first call is the most important.
Okay. Tell me why.
Well, because whatever point in that list of names that you get the phone call, I guess I ought to back up a little bit. Yes, if the first person they talk to really wows them, a lot of times they won't call the second and third person. But I think sometimes more than not, being the last person and them already having the information that they have and you being able to pull out the information that they have gives you a little bit more leverage in terms of picking the product that that would be best for them, that you have the most advantage with. A lot of times, again, I think the in-house lenders that they're going to call are going to be not so aggressive because they feel like, well, I've got the deal. I know my realtor really pushed me. I've got the deal. I think if they have one or two, or if you're the second phone call and the first phone call was a very monotone, not so helpful, just gave out the interest rate type of individual, that you're going to look a whole lot better than the first phone call.
Mm-hmm.
So, I don't know. I guess that theory could be incorrect if you do have a situation where the first phone call is a person that wows them.
Yeah, well, I guess the ultimate answer is it's whatever works for you. It sounds like you're very articulate over the phone, and you don't have a problem getting a second, or third call.
I've had real estate. I had a realtor one time, and I couldn't understand what the problem was, but he gave his client my name about to call about a program. The customer called me, was not happy at all with the lender that he initially sent them to, which was an in-house lender. And the customer and I built a rapport over the phone. Customer had not met with the other loan officer, but had passed some information and even locked in on a rate. I didn't quite understand that, or she thought she had locked in on an interest rate, didn't know what was going on. Because generally, if somebody says they've already taken a loan application with another institution, I'm not too apt, unless they're very dissatisfied or unless they're very insistent, I'm not going to encourage them to leave that.
Sure.
I don't like people taking business from me after I've done the work, and I don't do that to other people. But in this particular situation, per the customer, a loan application had not been filed. They had not been happy with the service that they'd gotten so far. And, the rapport was such that she said, I'd really like to do business with you. So I called up the real estate agent and said, I need you to fax me the contract, blah, 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 blah. Well, he was indignant. Well, they've already locked in with so-and-so. Well, the first words that I wanted to come out of my mouth were, why in the heck did you give him my name if you didn't want me to get the business?
Yeah, right, exactly.
And that was, the person apparently got a little bit belligerent with the customer as well, and the same words came out of the customer's mouth to me. Why in the heck did he give me your name if he didn't want you to have the business? Well, ultimately, that's basically what I said to him. I said, if you don't want me to have the business, you better not have him call me, because, probably 89.90% of the time, I will get the business if they call me. So
it sounds like a realtor almost wasn't doing his job out there.
Well, he wasn't. He wasn't. And the sad thing was that he asked me about this client for weeks. So of course, when the individual called me, I thought that he wanted me to have the business. Had no other reason but thinking that he wanted me to have the business.
I'd like to change directions a little bit and ask you if you get business, what I call outside of the box, and how you go about it. And by that I mean anybody but realtors and new homes, stockbrokers, CPAs, and if you address your comments with respect to the listeners out there who are looking to develop some alternative sources of business.
Well, my alternative source of business comes from a networking group. I'm involved in a networking group that allows only one individual from each business. So in other words, there's a real estate agent, myself, a traditional banker who just does banking services, insurance agents. There's 25 of us in the group.
That's great. Tell me.
And all we do is pass referrals to one another.
This is fabulous. I can't tell you how many times in an interview where I say legitimately everybody brings one new idea to an interview, and this is yours, and I really like this, and I wondered if you would go into this in depth, because this is a great idea. Someone could go out and form their own networking groups.
Well, there's already a group set up, and I don't know whether I'm allowed to say that on something like this.
Well, as long as it's not, we don't want to know anything proprietary to your company. Other than that, you can say whatever the heck you want.
It's not proprietary to our company by any means. I was brought into the group by a real estate agent, and in fact, a couple of other loan officers in our company have since been able to go into other chapters in the area. Mm-hmm. But it's a business networking group called BNI, and they're pretty much all over the country. And of course, it's really all a matter of the dynamics of your group. I'm sure there are networking groups that fail, because the ultimate goal of the individuals is not to pass on referrals, but to just gain referrals. But our meeting is totally set up with each individual in the group making sure that everyone in that group understands what type of business they're looking for and what they actually do. So if one of the members of the group is out at a dinner party and somebody says, I'm getting ready to buy a home, that individual from the group can say, well, here's an insurance agent, here's a realtor, and here's a mortgage loan officer. Or, I'm looking for a job. We have a personnel person in our group. But it's been a relatively good source of business. There is also an investment financial planner in our group, so he will send people to me from time to time to do second mortgages. But the whole meeting is, again, individuals standing up and saying a little bit about who and what they do, who their clients would be and what they do with their clients, and then passing around referrals and giving testimonies of each other's services. In other words, if I gave out the name of an insurance agent and the customer called me back and said, gosh, he did such a wonderful job, then I might give a testimony in our meeting, and we meet once a week.
Yeah, this is really good, because it also, by extension, I'm sure it's a bit amorphous in the fact that if you have a participant in the networking group that you don't feel is up to par, well, you simply can and quietly just not refer anyone to them. So it sounds like it can be self-correcting too.
It is. It is, very much.
Yeah, I like this idea. I like it a lot. I think a lot of the listeners out there that are listening to this, this is an excellent idea, either with an established group out there or going out and forming your own. And I have to tell you, the people that I interview, they're all very successful. They all do very well. They're all pretty much extroverted, and most of the people out there would have no problem taking an idea like this and really running with it. I have to believe, for our listeners out there, the loan officers, that you have to know people, as you say, that are title agents, car sales, any amount where you can get a basic group going.
That is very true.
Yeah, I really like that, and I think we're going to end the interview on. I told you I'd like to end it on a high point, and I think this is just an excellent idea, and I think our listeners out there are going to really take to something like this. So I want to thank you very much for taking the time to talk to us. It's been wonderful, Joyce. You have a lot of experience. You have a lot of good ideas for the people out there, and I think your comments in today's environment with the Internet and affiliated relationships are very much on point and taking a heart out there. So thank you very much.
Thank you.